I'm Linda with Tax TV, here to help you better understand the Child Care Expense Tax Credit. To claim the Child and Dependent Care Expenses Credit, you must have paid for the care of a qualifying individual so that you or your spouse could work or look for work. If you're married, both spouses must have earned income unless one spouse was a full-time student for 5 months of the tax year, or one spouse is physically or mentally incapable of taking care of themselves. The expenses paid must be for a qualifying individual, which includes a dependent under 13 years old or a spouse or dependent who's physically or mentally incapable of self-care and who lives with you for more than half of the year. If the person only qualifies for part of the year, then just those expenses incurred when the person was qualified are included when calculating the credit. For example, if in July your 13-year-old turns 14, then only those child care expenses you paid up to that birthday are included. Also keep in mind that the expenses included in calculating the credit are limited to the first $2,400 if there's one qualifying individual, and it's capped at $4,800 if there are 2 or more qualifying individuals. The credit amount you can claim is then a percentage of the amount of child care expenses allowed. For 2011, it starts at 35% of the expenses and decreases to 20%, depending on how much money you earn. Naturally, lower income earners can claim a higher percentage than those who make more money. Remember that if you pay someone to look after your dependent or spouse in your home, you may be required to withhold and pay Social Security and Medicare taxes and federal unemployment taxes for your household employee. For more information relating to child care expense credits and current rates, get a babysitter and check out taxtv.com.